Hi, everyone, and welcome. My name is Lauren Shahadi. We are building off our recent Business of Sports story about the league's investment into the Japanese market, a business strategy that's expanding the fan base, the talent pipeline, and the overall growth for baseball. And today, we're taking a deeper dive into the growth strategy playbook, talking about how executives create value, that's at the core of everything, right? And manage risk when expanding their businesses. I'm here with two very special guests, defensive and offensive experts from CohnReznick. Yvette Connor, welcome to you, and Greg Mochizuki, thank you both for joining us. Sounds like you're the defensive strategist, yes? Tell me what your role is at CohnReznick, and welcome.
Thank you. It's a pleasure to be here today, Lauren. We appreciate you having us. So on the defensive side, and building on what you just said, what we're thinking about in the risk advisory practice is, okay, let's do that expansion. Let's pursue that growth. Let's go do all of those great and wonderful things. But have we thought about what could get in the way? And we'll talk more today about, and how could you size that up?
Okay, so assessing risk from both sides, from the defense to the offense. Now you're talking my baseball language. What's your job, Greg? Tell me.
Yeah, so I'm a transaction advisory services partner, and M&A is a big piece of the offensive strategy when it comes to the private equity and corporate playbook. So what we focus on is financial due diligence and looking at the quality of earnings, the quality of revenues, customer base, et cetera. And this is something that's integral to part of their strategy.
So two different sides. Do you work together, you and Greg, Yvette?
We do.
How so?
So if Greg were analyzing, for instance, the expansion into Japan, making that relevant for a lot of the industries that he works in, what we would want to do is understand, what are the assumptions about revenue? What are some of the assumptions about expense? What are even some of the assumptions about the fan experience, as an example?
Okay, so how can you advance that and enhance that, Greg?
Yeah, so I look at a lot of targets for clients that spin across the technology and the services sectors, and something that we're very interested in, and our clients are very interested in when it comes to financial diligence, is the stickiness and the recurring nature of revenues. Customer base, cost savings opportunities. We're looking at different pieces of the cost structure and seeing where they can optimize and implement synergies. So those are very important.
You know, I'm listening to you, Greg, wondering, how do you know if you get that right? Do you?
We do our best for our clients, and I think it's important to look at what's driving the value of their deal. You know, there's billions of dollars of capital sitting on the sidelines right now, and it's waiting to be invested. You know, diligence processes might be a little more dragged out. We may focus on certain aspects, but we try to focus on the things that drive value in their deal.
How do you know if you get it right, Yvette?
Well, we're actually in the business of assuming that most things are not perfect. And so when Greg's working on a transaction, as an example, the way that we would work together is he would have his revenue assumptions and he would have cost assumptions, right, in the simplest form. And in today's environment, where we're seeing those big ebb and flows, what we want to do is try to size that up through various types of scenario analysis and tools that allow us to go a little bit deeper and see, where might the volatility come from?
Okay, so that's interesting. There's different levels. Yes, Greg?
There is, and I think it's important to understand if your client is looking at a platform deal where it's going to stand on its own and has to be stood up on its own, or if they're looking at a portfolio company add-on acquisition. Those are two very different types of transactions that require different skills and different deep dives on things.
Oh, you're shaking your head, yes. Yvette, what's an example of that on a larger scale?
Well, one of the things that we're working on right now, given some of the recent changes that have happened since January of 2025, is we're taking a look at what we're calling the tariff risk impact model. And this is a tool that we're developing that would allow actually many industries to participate in a diagnostic that would help them imagine all of the different ways tariffs could impact their business. And if you really think about tariffs and the potential impact that they have on what we call cost of goods sold, then that's the first place you want to hunt. You want to go there and you want to understand, in a changing tariff environment, what does it mean to my profitability? What does it mean to my income? Once we get past the big financial metrics, what are we talking about? Operations. We're talking about operations, how the business runs, right? Think about if you were a CEO, right, Lauren?
Yes.
You would say, Yvette,
yes.
Here's what I really want to know, right? I really want to know, is my supply chain going to hold up the way that I would like so that I can make that money and hit the outcomes of the deal that Greg has worked up for you, right?
And that's your focus too, Greg, just from a different angle.
Yeah, it is. And I would say that the deeper that we can go in diligence, the better it is. If we can dive into gross margins by SKU, if we can dive into product line profitability, if we can can go really deep with that lens during diligence, we can provide the best insights to our clients.
So I'm listening to you talk about a business. What about a portfolio of businesses? How does that change?
Yeah, so definitely when the dust settles and the M&A deal is done, operating partners of private equity firms are looking at their portfolio, and they're looking at individual investments and also the portfolio as a whole to see how they're generating returns. And something that's very important is looking at each performance indicator and also looking at how they can synergize across their portfolio.
How do you help in that venture?
When you're looking at the portfolio, you're still asking the same questions from my defensive perspective.
Risk.
Right. The nice thing about it is if you've answered it on a by company basis, you can look at it a whole bunch of different ways, right? By industry, by size of company, by time of when you did the deal, or all together.
So you're looking at it in so many different ways. Now you have all this knowledge, right? What do you do with that knowledge, Yvette?
Well, knowledge is power.
Yes, it is.
And so I would say that if you have put Greg and I together, you have what we would call maybe the alpha for the offensive and the beta for the defensive. And now you can begin to make some real good risk intelligent decisions.
Listening to you in our discussion, what you do is you help growth-focused companies gain a competitive edge. These are uncertain times, Yvette. They just are. How do you approach it?
The very first thing I would say is that speed to execution matters. Those who figure out what that uncertainty means to their particular business first become winners.
It's key when you enter an M&A market to have a playbook. And part of that playbook is different forms of diligence, beyond just financial diligence, what I do, but also tax diligence, operational diligence, commercial diligence, IT due diligence, and also technology due diligence is core to that process.
The speed to execution, that is in most businesses, right? That's kind of been the theme. Thank you so much for joining us. This has been an awesome, these deep dive discussions. I always learn so much. I'm also a CEO now, according to you, Yvette. So thank you so much. I appreciate the time.
Thanks for having us.